accomplish here. We're trying to learn something and take a skill into our lives that is valuable, and part of that is to be able to locate and navigate through a 10K report. The reason I don't like using annual reports on companies is that's not been reviewed, audited. I mean, that's not controlled. Once the SEC is taking place, there's no way to modify this report. If I work for Verizon, I could go in there, and Verizon would never do this, but a lot of companies would, to go in there and modify my earnings and my profit, and investors might make bad decisions. This has been submitted to the SEC. Okay, this is as consistent as possible. Okay, so again, maybe you know a lot about your company, maybe you don't, but it might be interesting if you chose Apple to read a little bit about the company background. It goes through the strategy. Maybe you feel that you understand the strategy, maybe you don't. Take a couple of minutes and read it. And then throughout here, it talks a little bit about how the business is organized, all the different locations and subsidiaries that exist for Apple, which, again, might be interesting. Their products, which we're all familiar with, but it might be interesting to find out how Apple perceives their product offerings. Okay? I mentioned this, I think, to your class, but the iPad was actually developed before the iPhone. And although the iPhone was released first. One of my, I'm not going to say friend, one of my acquaintances was one of the 3 guys who actually invented the iPod for Apple. So he gave me some good information about how their product development worked. So again, you might go through here and they talk a little bit about iCloud, and that's a new offering that they have, their operating systems, their software packages. Okay, and I'll try not to make you seasick here, but they talk about who they feel their competition is and how they address it strategically. We've talked a lot about that over the last 2 quarters, generic strategic strategies. Okay, they go into their R&D discussions, how much they're spending in R&D, billions of dollars per year, by the way. Okay, about their patents and copyright, and then some discussion on warranties, which we covered in Chapter 11. Okay, there are 60,000 employees of Apple, which might be interesting to a lot of us, right? I mean, Arthur Andersen, who I worked for, had 100,000, which I thought was really a big company. Then this goes into some risk factors. So most of these are pretty generic. I mean, it's almost like cookie-cutter language across any tech company. You're going to see these. Well, we're highly susceptible to global economic, conditions, whether they rise or fall. But there's a few in here that I think that are unique about Apple that your company might also have in here. Let me see if I can find it. Oh yeah. The company relies upon third-party intellectual property and digital content, which may not be available to the company on commercially reasonable terms. So if you know the history of Apple, and some of you guys were pretty young when Apple was really leading the market, and then they fell off. But what killed Apple when it was racing against the PC industry is that they actually would not allow any outsiders to write any software for their PCs, for their computers. Mm-hmm. And the PC community, the HPs and the other PC manufacturers did allow it, and Microsoft, of course, came on the scene and wrote all this software, and then there just became more resources available for PCs than Macs, and so they took off like wildfire, and Mac sort of stalled. And so when they went through the second iteration of Apple this time around, Steve Jobs came back in. That was a lesson he had already learned. So now if you look at all the thousands, tens of thousands of apps that are available for their products, a vast majority of them are being developed externally. So that was a good strategic development. That's one of the reasons why they're a market leader now. So they sort of come full circle if you think about it. So here's future performance depends in part on support from third-party software developers. Anyways, you go through here and you'll look at some risks. And again, we're only on page 16 here. We've still got a lot more to cover. After that, they'll go into a couple things, their legal proceedings, so they'll discuss some of their potential lawsuits that they're facing. Some are antitrust. And then this is kind of fun. So they show a quick graph of their stock price. And I'm sure everybody in this room bought Apple in September of 2008, right?
Right.
Maybe you should have. My dad did. It really makes me mad. And now he's selling it because he's going to buy Google. He thinks he's going to figure that one out, too. You better be right, otherwise my kids aren't going to college. Then there's some selected financial data here. So this is again, if you're an auditor, you have to review every number in here, every single number. Okay, we haven't even hit the financial statements yet. So notice that this is just some select data, some stuff you might want to see, shares used in computing earnings per share, total assets, some high-level metrics about the corporation for the last 5 years. Okay, then they go into what we call, this is called MD&A, Management's Discussion and Analysis. This is really kind of cool. So, this is somewhat of what you're doing. You're benchmarking your company against other companies. If you did an intra-company analysis, year over year, you would be looking at it from this perspective, which is one of the reasons I don't give it, because you could just copy this. But it might be interesting to see how Apple sees that they've changed year over year in their strategic development and their revenue stream. It talks about the tsunami and the Thailand flooding that happened that had a substantial impact on Apple, and of course with thousands of other companies. And then they go through their revenue recognition, how that works, and some of these are not easy no-brainers, especially when software is involved. So anyway, so they talk about warranty costs and how and then look, they do their sales by geographic region, which is a requirement and also very interesting. You can see how for example, they've had substantial increases in the Americas and Europe year over year, doing 150% more in revenue. And then this is the interesting part. They'll go through and compare fiscal year 2011 versus 2010, and they'll look at it from multiple perspectives. First by net sales. Then we'll look at operating performance. They'll look at it by geographic region. So you could spend a lot of time looking at gross margin, which also is known as gross profit. So there's a lot of good things involved in here. They look at their operating expense change year over year. So after you get through all this, and there's a lot, and imagine, people are saying, oh, accounting's so easy, I don't know what you complain about. Realize if you're an auditor here, you've spent 41 pages and you haven't even touched the balance sheet yet. Okay, this would take a month for us to tie this out. That's why an audit of Apple, guys, is probably a $3 million engagement, just for the audit. Because this is literally thousands of people hours being put forth. Now we're finally here. And so this is where you're going to spend, honestly, where you're going to spend almost all your time, which is locating the income statement, which is called the consolidated statement of operations, same thing. Remember, we show comparative, 3 years for profit statements and loss statements, 2 years for balance sheets. And then finally, the last one is this one. Remember I told you your textbook teaches the consolidated statement of retained earnings. I told you a few chapters ago that that's not usually commonplace in disclosure. Instead, they will present the entire roll forward of equity. And there are some items on here that we actually understand, like unrealized gains and losses on marketable securities that go directly into equity. Some of these things we actually haven't had a chance to talk too much about, okay, like foreign currency translation. So you're not going to use this statement, but since it's there, I'd like you just to spend a couple minutes sort of sifting through it. If you take advanced accounting with us or somewhere else, you'll actually be responsible for understanding the specifics of how this roll forward works. Okay, here's the cash flow statement. Again, I don't think you'll be using this, but I would spend a minute just looking at it and realize that, that it's set up. This is the indirect method, right, which we just learned. And there's a couple non-cash expenses that we're actually not familiar with yet, because remember I told you we're only going to isolate a few. Changes in operating assets and liabilities, okay, we've talked about that. That's how they got their cash. They call it cash generated by, we call it provided by. And then here's all the investing activities, some of which, remember, I told you go outside the plan asset category, like the purchase of marketable securities, which is an investing transaction but doesn't fall into our purview of how we look at it, because we're just isolating property, plant, and equipment changes. We're just looking at these here. But there are some intangible changes as well, and I mentioned that's why this can get a lot harder than what we're already doing. And then here's some things we do recognize. The issuance of common stock, that's something that we know about. These last two are some more higher level issues, one of which I'm not even familiar with. So, and there's some supplementary cash flow also, right? In this case, we're going to show the cash payment for income taxes net. That's, again, something on a more advanced level we would discuss. Now, remember so we're on page 46. Now, I showed you guys earlier in the quarter that companies will use the footnote disclosure in the back to provide additional information about their financial statements. Some of which, the first one just goes through summary of significant accounting policies, how they recognize revenue, for example, which really can be quite sophisticated for big conglomerate corporations. It talks about how they recognize warranties and advertising and share-based compensation. But then as you get into the other notes, derivatives, geez, this gives me nightmares. In property, plant, and equipment, they'll provide further detail. They'll talk more about their goodwill. This fair value, this is where I spend most of my time in venture capital valuing investments. And then, within that, they're going to provide further detail with some of their accounts. So cash gets its own description. As we get further in, they're going to look at derivatives. And then beyond that, here's the property, plant, equipment. Remember, major corporations just show one line item, and then in the footnotes, they break it into the different categories. And so this will go on and on and on and on. And so by the time this is finally over, we get to the opinion by the auditors, all this work, and we write 4 paragraphs. Okay? Page 76. This is what I would call a small annual report, or medium size. I've been part of ones that are almost 100 pages. Okay? So here's the report by the accounting firm, and then we're done. So in reality, you would probably just go to the financial statements, but I would just encourage you to spend a couple minutes, instead of hitting Control F, just scan through it. Scroll through it and see what you see. One other thing which I want to quickly talk about, and then I want to give you a few minutes to meet with your groups. So if you go here, guys, on the income statement, one of the ratios is you would take interest expense and divide it for the times interest earned ratio. Notice I can't find interest expense in here. It's buried in this line item, other income and expense. So when you guys go to do times interest earned ratio, I want you to exercise a 5-minute rule. If you can't find interest expense in 5 minutes, you come see me, okay? Either before class or after class. You could spend days trying to find this, and it's buried somewhere. Okay? What I would do before you come racing to me is hit Control F and type interest expense, and then see if you can find it. So the company had, look, the company had no debt outstanding and accordingly did not incur any related interest expense. Grab that, hit print, and highlight it. So when you get to that ratio, you write not applicable. It is possible, however, that your company is going to bury it and you'll never find it. You need to let me make a call. I will tell you whether or not you should approach that ratio. Every other ratio will be easily found. The numbers will be easily found. Okay, any questions on how the 10K filing works or what's in it?
No, just a question.
Yeah.
I think on the assignment you put that instead of use sales for credit sales or something.
Yeah, so the formula in your book for accounts receivable turnover says use net credit sales. The problem is they're actually not going to tell you in the income statement which of these sales were credit, which were cash. Okay. So you're going to just use net sales.
Net sales.
This
okay.
number right here.
Okay.
Any other questions? Okay, I left you a whopping 5 minutes. I got to give you more time tomorrow, but why don't you spend the next 5 minutes talking with your group for a few minutes, get some ducks in a row. I will give you 15 minutes tomorrow, okay?